So good afternoon, everyone. Thank you for investing your time in this panel discussion. Today, we have an amazing panel on investment budget and glance, where we'll be talking about various relevant factors to this topic, thereby discussing upcoming trends. But before we dive it into the introduction of our esteemed panelists, I would like to introduce myself. I'm Vijay Lahoti. I will be moderating this session. I'm pursuing MBA Financial Services from Woxsen University, prior to which I have a work experience of 3 years in derivative trade settlements, confirmations, corporate finance, and in market research and enterprise valuations. Apart from this, I am operating as a president of Finance Club in Woxen University. Moving to introduction of our esteemed panelists, Dr. Ravi Singh, sir, is a doctorate in statistics with a working experience of around 18 years in financial markets and has an expertise in equities, Nifty, Bank Nifty, Nifty stocks, currency, both in futures and options, and in bullions, metals, commodities, and base metals. So he has developed several mechanical, statistical, and econometric models for research, brokerage, generation, PMS, and fund management purposes, giving consistent returns throughout the period and made several arbitrage models for futures and options of NSE, BSE, and MCX. So he built several efficient strategies which aimed at reducing the cost of hedging and trading activities, and also has been a mentor for finance aspirants of over 500 plus institutes with a major screen presence on various TV channels, YouTube channels of India Today, and ET Market on regular basis to deliver well-researched calls, market recommendations, and trading strategies. Also being a regular invitee on various domain-related panel discussions with our renowned industry personalities, his articles, opinions on market investments, government policies are also regularly published on various renowned print or digital media. Sir has also presented many investor awareness seminars based on finance and related dynamics. Coming to Mr. Prakash Gava, sir, Mr. Prakash Kava sir is a certified financial technician, technical trader, and a trading mentor. And he is a postgraduate in management, exposed to corporate world as a senior manager at a young age in late 70s. Sir is a SEBI registered research analyst and a winner of Viewers' Choice based Best Technical Analyst Award, and has the honor of receiving the hands of Prime Minister Narendra Modi. So he has appeared on all the business channels in the country in the past 2 decades and regularly writes for various newspapers, magazines, and is regularly invited for lectures and seminars all over the country. Currently, Sir appears on CNBC 18, CNBC Hours Business Channel, and besides this, he's a avid reader. He has a varied interest in accomplished sports person and actively participates in competitive sports. Sir is a marksman and an aviator who has a passion for flying. Gliding is his hobby, and he is among the pioneers of hang gliding in the country. By temperament, Sir is a fighter and loves challenges and strives for excellence, only excellence. Mr. Viresh Hiremat sir is an employee turned entrepreneur after serving 16 years in broking industry, and presently he is helping commodity and currency exposed business and price risk management. Sir is the founder and director of Finland Consulting Private Limited, helping commodity and currency traders to learn and trade, as well as helping authors, coaches, trainers, and speakers to build seven confidence coaching businesses. So, Sir is the vice president at Teachers and Leaders Community, Galaxy 4, and ardently working with TLC, world's leading mastermind community for coaches or trainers. So, has joined TLC as a member and fulfilled his dream of becoming a certified coach and a trainer. Sir launched his ebook commodity yearbook 2022 at till 2022 global convention held in April 2022, followed by learning all the secrets of building successful coaching business, such as coaching skills, business skills, technical skills, and under a single umbrella. Last but not least, Mr. Syed Hassan Zafar, sir, is a HOD of Finance at Woxen University. Sir is having around 13 years of experience in the field of finance and worked as a research analyst, deputy research head, and corporate trainer. He has marked his appearance on several national media channels as a financial expert to share his view on the financial market and crux insights. Sir has areas of expertise as security analysis, corporate finance, equity and derivative research, and valuation. He has taken several insightful sessions in top universities in India as well as abroad. Sir has been a mentor, a coach, a domain expert, and most importantly, a professor. Has always encouraged youth seeking career in finance and has always motivated them to aim high and effectively contribute to this emergent realm. He has a staunch belief that absolutely nothing is impossible when one's virtues are high and the why aspect is lucid. Sir has been awarded as the Best Faculty Award of the Year 2021 in Woxsen University and has also conducted more than several investor awareness programs across the country and has been awarded the Best Research Analyst multiply during his corporate experience. Coming to Dr. Ravi Singh sir, the question is, how are you looking at Indian market post budget and the sector which will be likely to perform post budget and having an impact on?
Hi, hello everyone. Thank you to Woxsen College for giving me the opportunity to speak on this forum. The point is that the domestic and international market volatility is dependent on the major, my point of view, is a six factor. First is a global growth, and second is a higher inflation, hike in interest rate, geopolitical tension, reduce investment, and I think COVID outbreak is also is one of negative developments such as a higher expectation of inflation, sudden rise in interest rate, and resurgence of the COVID pandemic, or escalating the geopolitical tension could push the global economic into the recession. The global economy is projected to grow 1.7% in 2023 and 2.7% in 2024. Sharply is downturn. Uh, Growth is in emerging market and developing economies is expected to slow down from 3.8% to, I think, in 2022 and 2.7% in 2023, reflecting the weaker external demand compounded by the inflation, currency depreciation, and tightening financial conditions and other domestic headwinds. By the end of 2024, GDP levels is also emerging. The developing the economies will roughly around 5 to 6% below the level which was expected before the pandemic. The recent outbreak of corona, especially in China, has affected its manufacturing sector so badly, so that the sharp correction is activity. India will be impacted from these micro factor developments in 2023, but the growth story would be the different in Indian economy or Indian stock market. For example, a few years ago, in Indian capital market was very small, but within less than 2 crore demat accounts. However, post COVID, there was some more than the 10 lakh demat account opening in a single month, and currently we are that total demat account around the 11 crore. So is a big number. So you can say that retail investor had dependent a degree of faith in build a long term portfolio in equity market. That's why despite FII's outflow also, and Indian stock market has outperformed the global market in terms of, if you compare with the return, significant headwind for the Indian investor to watch, or expanding the trade deficit or continuous outflow, FII's outflow, you can say, and volatility currencies fluctuations also. And physical tightening is one of the major point is there. And while the near term, you may see the higher volatility due to the global issue or union budget, or investor with a prospective at least 3 year would be the rewarded. And I think Nifty may touch in the near term before the budget is 17,200 because this time is a very high volatility. And due to the underlying weak sentiment, high volatility in the pre-budget. My point of view, if a sector major sector that agriculture, defense, infrastructure, power, and EV expected to the special focus on budget, boosting the economy, and may some good rally pre or post budget announcement for the long term perspective.
Thanks for your comments, sir. So I would like to move on to next question, asking Mr. Prakash Gaba, sir. So, sir, what is the best thing that can happen in the budget from investors' perspectives? Is it removing STT, CTT, or any such factor?
Well, good afternoon to you, and thank you very much for inviting me. The best thing that could happen in the budget? Actually, it's nothing. There's no point removing STD or CTT. There's no need for it. As long as the government collects money, it doesn't bother me. From an investor's point of view, income tax is an issue slightly. The rate of income tax could be an issue. So if you can leave some money at the hands of the common man, they want to spend it. So spending GST is good enough. So government can make money out of GST. It's okay, absolutely fine with me. But at the hands of the consumer, when he's making money, he feels the pinch. It's got nothing to do with economics. It feels the pinch. I'm making it so hard. It's difficult earning. Why am I spending so much money on government taxes? The income tax is a little botheration for me. It should be reduced. The slab should be reduced. I have no issues if they manage the income tax, the revenue point of view, the work from there in the GST. As far as stock market is concerned, it just doesn't bother me at all. As long as more money is at the hands of the government to spend it, either through STT or anything, just doesn't bother me. So I'm not claiming that I should, at the investor, money should be more. As an investor, he is very rich. It doesn't bother him. A little bit of percentage loss to the government in forms of taxes doesn't bother me. Let it go to the government, in the hands of the government. Let them spend well on infrastructure. That's important. Infrastructure, defense spending, a lot of import substitution is there. So defense spending, import substitution, and infrastructure will take care of everything. Anyone who they spend money, it will be ultimately at the hands of the government.
Thank you so much, sir. So the next question is to Mr. Veeresh Shiriman, sir. Sir, how you are looking at India's vision for the 5 trillion economy and how the investors can take benefit of this particular vision?
Yeah, first of all, my heartfelt gratitude to Woxsen University and the Finance Club for such an amazing workshop just before the budget speech by the Honorable Finance Minister. Yes, as you said, because it has been a vision of our Prime Minister, Shri Narendra Modi, to make or to take India to the $5 trillion economy. Yes, it is very, very important and a need of the hour to achieve and become a world leader in terms of the economy. But when it comes to achieving that $5 trillion economy, India may get certain challenges. Because see, India is mostly an import dependent nation, which makes the balance of payment it is the biggest issue for the Indian government to manage. Apart from that, the other thing is that the freebies all these governments are giving for the consumer, which are detrimental for the growth of the economy. So this year we are having 5 different states elections are going on, most of them on the northeast, and the major one in the Karnataka state election is going on. So now we might witness the lot of freebies from all the political parties to please the economies, to please the voters. So that will be a detrimental for growth of an economy unless and until when you restrict these freebies and focus on the development, real development infrastructure of the in terms of the infrastructure growth, in terms of the making availability of all the consumer goods. That will take the India to the $1 trillion economy in the near term. Unless and until if you not stop these freebies and making pleasing all the voters, then it will be take a little bit longer time. However, our central government, our Prime Minister Shri Narendra Modi is very much sure that we should focus on the development, not on the freebies, because we have so many examples in our neighboring countries what happening today in those nations. Because of those freeways, they are under a very debt ridden, they are in a trap. So that will very, very important for us as an economy to grow to that $5 trillion economy.
Thanks for your insight, sir. So the next question is to Professor Syed Hassan. Sir, what are you expecting from the budget, which will be helpful for the investors to determine their perspectives?
Thank you, Vijay, for these sessions, and of course, all the members sitting in the panel. My perspective, the thing which can boost the capital market overall and the investor perspective, I feel like maybe a little difficult at this time to say, but yes, if the ATC reductions, if we can if it enhance from 1.5 to 2.5 or maybe 2, that is something which the government will get the money through which, and they can put those money in the capital market, and somehow then the investment will go enhance in that way. So it's the one thing, and I really appreciate the thing which Prakash Gavasar added in the infrastructure perspective, that if you look at the infrastructure point of view, that infrastructures, the number was 17.4 of GAP percentage, and now is decreasing and currently somewhere around 14% from that levels. So the government has to think about infrastructure. Ultimately, the money will go in the hand and somewhere it's going to invest. So these are two things which I personally believe that if I can increase to 1.5 to 2.5, somehow the government will get those money and those money will be invested back. And the other thing is infrastructure investment that will boost the overall investment in the forum.
Thanks for your insights, sir. So the next question is to Mr. Prakash Gavasar again. So, your best technical pick most budget, let's say the technical pick post budget for the medium to long term perspective, 6 months to 1 year. What do you think would be the best picture of this particular situation?
Well, from the perspective of 6 months to a year or maybe 2 years, I would look at the auto sector. Now, auto sector by itself is looking well. It's the strongest sector in the entire spectrum of stocks that we have. Now, in these sectors, we have, I feel in this budget, possibly there would be a focus on EVs. Even if there's no focus on EV, but EV seems to be product for the future. If that is the case, I would look at EV manufacturers. EV manufacturers, the electric battery manufacturers would be Amara Batteries and Excite. These are two good stocks that I like personally from a slightly longer term perspective. And technically, the stock looks very good. Now, among the auto players, I would look at just Mahindra and Mahindra, Maruti, Tata Motors. They all into EV sector. Even Ashok Leyland is coming into it. Now, Mahindra and Mahindra just launched recently EV, but I would say that every 2 cars come out of the Tata Motors stable, out of the 3 calls. So I would say that 2 out of 3 cars coming off the Tata stable, definitely Tata Motors is in the ranking. Mahindra and Mahindra, yes. Ashok Leyland, they're also going into 4 years of commercial vehicles into EV. And I would certainly looking at Maruti. Maruti is the market leader. So I don't have just 1 or 2 stocks, something like a best stock. We need to focus on the entire sector, divide your capital equally into all these 4 or 5 stocks or 6 stocks, and then be safe. Because you never know which stock is going to go higher, which is going to lead. But the entire sector should be looking okay. So looking at 6 months to a year or maybe 2 years, I would look at this space, auto and EV focused auto.
Thank you so much, sir. This would definitely help investors decide their perspectives about which stock to invest and how to determine their particular factors about making a decision. So, my next question is to Dr. Ravi Singh, sir. What is your wish list from the budget as per the investor's perspective?
Yeah, basically, I'm also bullish on these sectors, but my expectation post budget we may see some profit booking benchmark indices, especially in agriculture, chemical, auto, IT, pharma. But is a long-term perspective is a different figure. Lower levels would be the good for buying these sectors, and for long-term fundamental and whatever the is technical setup is suggesting, Nifty may test the level of 21,000 by the end of 2023 or maybe mid of 24. So I'm very much bullish in Indian stock market, and most of the sector, auto, IT, and pharma will perform tremendous.
Thank you, sir. I'll add these talks to my watch list as well. My next question is to Professor Saeed Hassan, sir. Sir, as an academician, what do you think about setting up an international university in India? How is it beneficial?
Thank you, Vijay. Fairly expected questions as academicians. So, fine. This is very, and we are seeing this from a long time. The UGC is trying to set up an international university in India that is going to enhance the pedagogical innovations in the country. That is going to give a chance for the cultural development. That is going to enhance the research scope with the corporates collaborations and global industry connects, and bringing the value and enhancing stretching your education system overall in the country. That is going to help us in a very good way, and that is other way that is going to enhance the competitions among the university levels as well, because if the Harvard and all those kind of universities setting up in India, so that is going to help, of course, bringing the standard a little higher in the country. That is one part. But the other way out, if I look at, of course, should be a mutual way. So if the Indian universities, those who are running very good in the country, they also can open their center in the other countries. So that is something which is, if you say as an education person who's related to that, I feel like this should also be taken care. And the Indian universities, Indian B schools, higher education, especially those who have very strong wings in the country, like IIMs and Woxsen is one of those who are setting up international university in India. So all those kind of universities, they can open their wings in that country. So I'm looking at both the sides for that part.
Thank you, sir. Thanks for addressing this. Mr. Viresh Hiramat, sir. So the question for you is, what's your view on commodity market post the budget? So is there any advice which you would like to convey to the investors therein?
Yeah, it's a very thought process question, because whenever the budget comes, along with the stock market, the commodity market also has certain wish list, certain expectations. Especially being an agrarian economy, agriculturally dependent country, and also dependent on most of the import to meet our requirement. There is a lot of expectation in terms of the easier import-export norms by the government, so that there will be a hassle-free import movement of goods between the different countries. That is one aspect. The second aspect is that one, for the last 3 or 4 budget, it has been expectation from the jewelry industry for the reduction of import duty on gold and silver. But only, I think 3 years back, there was a reduction in import duty from 12.5 to 7.5%. And once again, it was revised and taken it back to the 12.5%. Only the purpose of this having a higher import duty is to discourage the illegal import into the country, so that there is a proper accounting of all the import happening in the country. So that is the expectation, but I don't think this is going to happen in this budget, because the gold has been at a very highest level. If you look at the Indian context, it is trading at an all-time high. So I don't think it is going to happen in this budget. That is one aspect. The second thing, the CTD and STD, as Mr. Prakash Gaba said, so nothing to do with the CTD and STD with that matter whenever it comes to the investor, because the market participant there already digested this concept. Yes, we have to pay the CTT as well as the STT. That they are already taken a mindset of that one. Yes, it is going to happen in that one. The another important point which I would like to stress upon is that one, the agriculture commodities, because the last year in December 2021, the government put a ban on the trading of 9 different agriculture commodities, and this ban was supposed to end in December 2022. But the government of India extended this ban till next year, that is December 2023. So in absence of this one, there is a lot of challenges all the producers and sellers are facing from this ban, because they are not creating any price discovery mechanism to decide on how to proceed, how to manage their price risk and all. When it comes to the producers, all the farmers, they are not having a proper guidelines, not having a proper understanding what is the price for their commodity when the crop is ready for harvest. So they are not getting an indication of the price going to happen. At the same time, the same happens with the buyers also. This is making a challenge. This is posing a challenge for both these buyers and sellers in proper price discovery mechanism. So our expectation could be that a removal of this suspension. Once the suspension is removed, then they might put a certain restrictions to control the excessive movement in the prices of these agricultural commodities. So these are the things which are going to see on post budget when the budget is presented on 1st of February.
A very helpful comment, sir. So, last but not least, sir, there is a recent shift in the market regarding T+1 settlement date. So, is there anything like any insight you would like to share about this thing, or any certain factor which would which would be a positive or negative by investors' perspective?
It's asking me?
Yeah, anyone.
Actually, no, it doesn't matter really. In fact, it's something to celebrate, because we went from T+2 to T+1. It's a celebration. Doesn't bother him from the investment purpose. Because investor is there, he has the money. It's a matter of just giving 1 day early. Doesn't matter at all. All these expenses, TTT, STT, nothing matters. What really matters, like Professor Hiramat said, is no dose. You take as much money as you want from me, but spend it on infrastructure. Or its import substitution is good enough for me. But don't give it as dose, because that doesn't produce much. Take more money from me as long as you spend wisely.
Very true comments. I mean, it doesn't matter that whether it's going for T+2 or T+3 or STT or CTT, but the matter is whether the money is invested properly for getting better things, and the reason, in short.
Indeed, sir. Thank you. So, pretty well all the questions have been very insightfully addressed, and there are many things which were covered over this particular meeting, starting from the global grounds and what are the inflation factors for this particular equity market, and resurgence of COVID, sir has addressed currency inflation and deflation factors, and the positive or negative impact which the budget is going to have, which is going to happen on 1st of February. So every investor is looking forward for it. And also there are speculators in the market who would be trying to bargain their particular profits or losses on that particular stages. So Sir has also addressed defense spending, impact of GSTs, and yeah, there are many points like effect of elections and geopolitical reasons, economic factors, which every investor, every speculator, or whoever will be, like the retail or the corporate ones, have to address and look forward to it and decide their specs on that particular investment strategy, if they are going to buy it or sell it. And for the investors from this session, as our esteemed panelists have addressed that, technical sector, auto sector, and IT pharma sector are going to give good gains based that market is supposed to be bullish in the particular coming period. So so investors, like what I have gained from this particular session is, yeah, there are many reasons like government policies, the income tax effects, and what are the interest rate changes in the market, and the investments which we are going to make out of that capital, the amount which we are going to invest, and the gains which we are going to project should be in line while making a decision. So pretty much everything was covered for the commodity market by Girish Ramat sir, and certainly universities setting up in India could have a configuration in such a way that students are being taught about these trading perspectives in a broader way, and starting from the base, like starting from the college, they can make that decision or form a particular articulate at least that how this particular investment should be, what we are going to do, and how education system can help build good designs and better fit for the industry perspective. So I would like to conclude this session with this note. Thank you so much, sir. Thank you so much, everyone, for being present here and sharing such insightful thoughts about markets. And every comment was indeed helpful. And we would like to have more such sessions looking forward. And yeah, just eagerly waiting for the budget thing to happen on February 1st.
Thank you.
Thank you. Thank you so much, everyone, every panel member sitting here. Thank you for a great host by Vijay. Thank you so much.
Thank you.
Thank you, Woxsen University, and thank you, the Finance Club, for hosting this amazing session.
Thank
Indeed,
you.
sir.
Thank you.
It was a great collaboration between Woxsen University, Share India, and Finland. And certainly, we will be hosting more such events in the future line. Thank you, sir.
Thank you.